Good news was good news for stocks yesterday, and also bond yields went higher at the same time. What did you make of the way that the retail sales data and the wider data picture out of the US is being absorbed by markets right now?
Well, I think we're normalizing. We're going in a better direction. I still think we're pricing way too many cuts from the Fed this year. As you know, and I haven't understood the sudden panic about the US economy. We went from the start of July having no worry at all about US growth to suddenly being convinced of a hard landing just because of a few slightly soft prints. The fact is the US is still adding jobs. And yes, there's been a move up in the unemployment rate, but we have very high immigration still, so that needs to be discounted slightly. And most of their indicators show this is an economy still growing strongly. Atlanta GDP now, Fed reading, is still well over 2%. So I never understood the panic. I still think that the economy is doing absolutely fine. The bit that is confusing me is the power and straight line of the rebound. Even as someone who's stayed very bullish during the turmoil of the last month or two on a longer term basis, I expected August to be volatile. I thought we'd have more whipping around. I thought we might retest the lows before going higher into year end, but there's been no sign of volatility.
Yeah, the S&P, well, if you look at NVIDIA, I mean, there's some volatility there. It's been acting more like a crypto, hasn't it, in terms of the moves around the market cap of NVIDIA in the last few weeks. The S&P notching gains 6 straight days, to your point, around the straight line of upside, certainly in the equity markets. Mark, how are you assessing then? You talk about the relative resilience in the US economy, the pull and tug then of the strength in the US economy, the relative softness in China, iron ore taking a beating. You've got steel manufacturers in China screaming that there's a crisis, iron ore at $92 a tonne. What do you make of the impact on commodities?
I think it's another worrying indictment that Chinese economy is still struggling to escape, a slightly stagnating period. It sounds weird to say stagnation. We still got over 4% growth, but it's also a reflection of the fact that the style of Chinese growth has completely changed, and it's not going back. We're not going to the infrastructure boom of the past. So we do have overcapacity in this market. That the world economy is changing in terms of the infrastructure build. We're moving more towards a services-led economy almost everywhere, and for the largest economies in the world. And so that's why I think it's going to remain slightly tough for iron ore. But the companies behind iron ore are extremely efficient, still make good profits. So it's a less of a problem for the industry.
OK, and moving on then to where this all takes us, where this leads us to, Mark, what derails us now then? We look pretty risk on this morning for Europe and into the US session. The data's been reassuring. What can derail us?
Well, that's the thing. There are no real obvious catalysts on the horizon. We've got Jackson Hole in a week's time. Maybe it's that. Then we've got NVIDIA earnings. But, given we've rallied all the way to here without much volatility, you'd have to assume we carry on going higher. I am worried by that complacent view, given that I was expecting volatility in August. So I'm wondering whether there's some tail risk out there that might derail us. But at the moment, it's only second-tier data on the horizon. So there's no logical reasons to assume derailing next week otherwise.